Now, obviously, once you start getting lofty above your 20, you're taking some. Now, you see how this topping tail happened a little bit, and you got a little bit of dip here? Now you got a fat green bar, a lot of space between it. You take some profits there. Maybe you put it right back on the bottoming tail bar. Maybe you go back in here, all right? And of course, now you're gapping up a lot of space between the bar and the 20. That's a profit-taking bar. We tend to make this game a lot more complex than it really needs to be. You got 2,000 formulas from PE ratios to sales ratios and earnings reports and management and product lines and percentage of domination of industries and balance sheets and cash on hand, and that's the smokescreen stuff. First of all, you can't even rely on those numbers to be accurate. No one can, right? And as far as earnings, you don't get any of the money anyway, so you shouldn't even pay attention to that. That's for real. That's for accountants to do. Let me tell you what you pay attention to. You pay attention to the buyers and sellers and which side is winning. The sellers were winning. But on this bar, the game totally changed. The ball or baton was passed from the sellers to the buyers on that bar. I'm piling in on this bar, bottoming tail bar, way below the 20-period moving average, a lot of space in between. Now, you buy this one. If you have money left, you buy into that bull elephant bar. If you have money left, you buy into that bull elephant bar. If you have money left, you buy into that. You accumulate like the institutions do. They put one foot in and stop, and then another one, and then another one. They don't jump their whole fat elephant body in the tub all at once. They do it 1 foot at a time. And when all 4 feet are in, what do then? They sit down. And then they immediately, that sit down causes the last biggest splash. That's your exhaustion bar way above the 20-period moving average. And as they sit down, think of an elephant flipping his cell phone and calling CNBC. I can be interviewed now. All right? With a glass of champagne in the tub. All right? Simple 20-period moving average. Good question. Do I use simple or exponential? I found no evidence that the sexier varieties of moving averages work any better than the regular simple version. But if you are stuck on exponential, it's close enough. All right? Yes, sir. Excellent question. You're one of my traders, right? See? He's an intelligent guy. I love that. All right. Here's the question was, bottoming tail bar. This is a long bar. So, Oliver, if I'm going to buy into this bar, my stop is way down there. Now, every bottoming tail bar or elephant bar is going to present itself, and you have to make a choice. Is this one for me? It depends on what your trading plan is. So if you have a trading plan, which we help you build, you have a trading plan that says, you know what, I can't lose more than $300 on any single trade. Well, if you place your buy and your stop there, and that stop would exceed $300, that's not your bottoming tail bar. Does that make sense? But you can make it your bottoming tail bar. Instead of buying 300 shares, you buy 100 and fit it to your trading plan. Everything's got to fit your trading plan. You can't go out there. Guys, you can't do this yourself. I'm convinced after teaching traders 18 years, I can't do it yourself. Because listen, you go out and try to do this yourself. You'll come back next year and show me, say, Oliver, this trade didn't work. Look at this. I've been taking bottoming tail bars. They're not working. And I'm like, that's not a bottoming tail bar. That's a topping tail bar. You've been buying those? Right? And it happens all the time. It's like the weirdest thing. We veer off the track a little bit. All right? Bottoming tail bar way below 20. But remember the incremental buy approach. I find that traders do better when they break their buys up. Because the moment they put everything on the line, there's heightened anxiety. And the heightened anxiety causes wrong decisions. But if they just bought a nibble, if the stock is going down a little bit, they're not concerned with that. And it's just an easier way. And it's the way institutions do. Institutions can't buy 14.8 million shares in one single day or one single hour. They have to break that up. All right? Well, our traders get assigned a list of stocks to trade, 50 stocks, and their job is to find every single elephant and bottoming tail bar out there, along with, guys, this is not the only thing. There are 8 kamikaze events that I want them seizing, because that's where the biggest, fattest money is. Right? You taught 1 here, but there are 8 kamikaze events that are so accurate. This is where those powerful one-day gains come from. Those kamikaze scenarios. Bottoming tail bar way below the 20. All right? Some space between the high, and there's your run. Now, bottoming tail bar, there's your run. RBI, RBI. Bottoming tail bar. Wait. Bull elephant bar, buy. Wait, add. All right? A little lofty here. Here's your reward. The question was, do I care anything about volume? No, not really. Because first of all, I think volume should be taken care of with your watch list selection. So take volume out of the equation, all right? Get a list of stocks that fit a certain volume characteristics. Like I don't like trading like Joe's Pizza Shop on 8th Avenue.com, all right? The volume in that stock's going to be low, and you want something with some institutional sponsorship, all right? Now, I believe today that volume is overrated. It wasn't when I first started trading, but the way trades go through black boxes and dark pools of liquidity and things of that nature, it's made reading volume a lot more difficult. If I have it, fine. If I don't, it's okay. For instance, no volume characteristic tells you anything about that powerful move. Look at that volume. Nothing. In fact, the volume went down. This is a downward slope in volume, yet that was produced. You can't go by it anymore. All right? You can't go by it. That's why the footprints of institutional money, you can't form that bar unless institutions have just flipped to the buy side and said, I want all the stock in this range. You can't have it. That's the only way that bar forms. That's the way you find them. It's just like being a hunter. Track the footprints. If you're looking for a bear, you're looking for a pretty sizable footprint. And when you see a little tiny bird footprint, you don't confuse that with a bear, all right? This is a bear this is a big, giant, meaningful footprint that means something big right here. This bottoming tail bar way below the 20-period moving average. And there's your run. Not a kamikaze because it's at the 20. Live trade examples. So let's go over today. Well, no, I think these were Dan's trades, right? This is Dan's rim trade yesterday, right after the seminar. Right? Checked back into his hotel, takes the fattest, this is what time frame is this? A 1 minute time frame, Dan?
Yeah, 1 minute scalp.
1 minute scalp. 1 minute now. The fattest red bar in quite a while. Shorts this bar, puts a stop on the top of the bar. What if a single red bar ignored is a buy, what do you think this is? A single green bar all by itself and the low gets taken out. That's an add. That's a GBI, a green bar ignored. We add to the GBI, short this bar, add to the short there. And then when you get a fat red bar way below the 20-period moving average, what do you think you're doing there? Covering. Just like a fat green bar way above, you're selling. Fat red bar on a short way below, you're getting out. And you're getting out way below that before that tail forms, because when this is all red, if it starts to go up and that tail starts to grow even a little bit, you take your money out of it. Does this make sense? This trade made, look at the trade. Look at this is his exact P&L. He traded small. He made $500 in a few minutes on just rim. Closed the trade out at 507. Now check this out. The next trade was TNA, where he made $471 on a trade, and that's just 2 trades. So here, bottoming tail bar, buy, all right? Gets, this the blue is the 20, gets a decent distance above the 20-period moving average, where he will not let the stock start falling back. Once you get above that 20, you can stay there, hang on, see if you can get more. But if it starts to erode from a heightened position, you've got to cut the trade. All right? Your nastiest falls happen from the basement window? No. They happen from up there. So you can't play around once you get at these elevated positions here. All right? These are 2 live trades actually taken on this same concept using chart. But guys, listen, give me 5 minutes. I want to show you something here. I have a few more trades from today I'd like to share with you. But I do want you to visit iftvideos.com. This site has hours of presentations that I've given and my top trader Dan has given as well. I'd love to have you do that. No obligation, nothing for sale, just pure, unadulterated education. Become a friend on Facebook. Please do that. I can help you through this medium. I get 4,000 emails a day. All right, it's just unreal. All right, but through Facebook, if you have a question or need some clarification on something, it's a better medium for me to stay in touch with you. So become a friend on Facebook. Don't go to Facebook and look for me. Just plug this in your browser. It's just easier. Facebook.com/trade for wealth. All right?